Hey, what is happening, bulls and bears? My name is JJ. You're watching Bull, Boom, Bear, Bust, back with another dose of economic reality. It is May 28th, 2023. And this is Sunday, the day before Memorial Day. So I'm having a nice 3-day weekend. I took yesterday off, didn't put out any videos. Actually, I had to do other stuff. But tomorrow is the holiday, so I may not be putting out a video tomorrow. So today I'm going to pack a few extra news items into the report. So I might go a little bit longer than usual today. But thank you very much for joining in. But first, Memorial Day, quick fun fact. I was talking to some coworkers about this the other day. Memorial Day started off as a day called Decoration Day because people decorated and celebrated the lives of fallen soldiers, what many people would call heroes. And they decorated the graves, so they called it Decoration Day. People thought that was kind of a dark or grim thing to call it, so they changed it to Memorial Day, and that's why we celebrate Memorial Day now every year. And it actually wasn't declared an official holiday until 1968. It used to be the last day of the month, but then that could be any day of the week. So they changed it a few decades ago. They changed it to be the last Monday of every month, which is nice, or the last Monday of May. So that way you get a 3-day weekend. So kind of nice when you see these holidays fall on a Monday, and it gives you a 3-day weekend. And I've always loved 3-day weekends, I think, like most people. But not just that. After the 3-day weekend, then you only have a 4-day work week ahead of you, unless you're working overtime or something like that, or unless you're like a lot of people and you're working multiple jobs, right? And I've always pointed to that as one of the big deceptions in the jobs numbers, is that when people get laid off or when they quit a job and then they go take on 2 part-time jobs to try to match the income that they used to make, that's looked at as economic growth, or that's looked at as a strong jobs number. And that's just one of the many flaws we have in the way the economic numbers are being reported. And the really scary part is the Fed is making decisions on monetary policy based on this very flawed data. And then people often wonder why they always get it wrong. You know, why does the Fed always get it wrong? Why do they cut rates when they shouldn't? Why do they raise rates when they shouldn't? Well, that's one of the reasons why they're relying on flawed data that the government needs. The government needs to put that flawed data out there to make the economy seem like it's doing well when it's really not. When you have people buried in debt, most people living paycheck to paycheck now. Another report came out. We have talked about these over the years. Another report came out saying most people don't have enough savings to cover a $400 emergency expense. Now, I'm not sure why they picked $400 as the cutoff or as the criteria, but that's the report that came out. Now, we saw that change in 2020 when people gained a lot of additional savings, which was very unusual because so many people didn't have to make their normal payments. But we know this is all based on fake money, money that they can create at a click of a mouse. So let's hear a word from our sponsor right here. Then we're going to get into the news on the other side. And you need to protect your wealth. You need to hedge against this fake money. We're going to talk about the debt ceiling on the other side. But first, a word from our sponsor. There's no denying it. Gold is hot right now. Prices are soaring, and experts are predicting even more to come. Not so long ago, gold reached its all-time high of $2,069 per ounce. And now it's inching even closer to that number again. Bank of America, one of the largest banks in the world, is saying that gold will rise further still to over $2,200 an ounce later this year. So what, right? Well, gold is already a safety net for your hard-earned money. And now when the stock market is all over the place and the value of the dollar is uncertain, being safe counts like never before. Noble Gold is offering a free 5-ounce America the Beautiful coin for any qualified IRA or 401k rollover. Terms apply. A solid silver U.S. Mint issued coin celebrating our national parks, free with every qualifying precious metals 401k or IRA rollover. You can't go wrong with Noble Gold investments. Call 877-646-5347 or go to bullboomgold.com. That's bullboomgold.com. Link down in the description of this video. All right, so let's get into it here. The debt ceiling has been increased, or at least a deal has been reached between members of the House and the whole process that goes along with that. And I've always said here, they're always going to increase the debt ceiling because who wants to sit there and be the person? I'm talking about the lawmakers here. What lawmaker is going to sit there and be blamed for the entire economic system collapsing? And yes, the entire economic system, this economy is based on never ending uh, increases in the debt. You have to keep borrowing, and that's true in a Ponzi scheme. In the Ponzi scheme, you have to have continuous new money inflows in order to keep paying out the people at the top that got in first. And when you look at the US economy, it's not much different. You have to have continuous money flowing in the form of debt in this case, because we have to borrow the money that we're spending. And people think there's nothing wrong with it. Just the fact that the U.S. has to borrow money just to keep operations going, just to keep things functional, that by itself should be enough to make you scratch your head and wonder what's going on in this economic system, in this financial system that makes this all happen. Endless amounts of debt. This is only possible by the fake money that they create out of nothing, but yet they charge you interest on it when you go to get a loan. And the higher prices are, the higher the cost of living is, the more loans you have to take out because you can't pay cash. So the people that can pay cash for things are the group that the pool of people that pay cash for things is getting smaller and smaller. And now it's mostly concentrated in the top 10%. And, that's been happening for decades. The wealth has been shifting to the top, to the top, to the top. And even in times of quote unquote crisis, like in 2020 and other times of crisis, who gets hit the hardest? Who gets the short end of the stick, so to speak? That's the poor people, the poor and the middle class and the working class. And the wealthy always seem to get wealthier, don't they? And now we see data out here that I've been reporting on for at least a year now, that the top 10% of income earners, or top 10% as far as the wealth ladder, they own 90%, nearly 90% of stocks. I think it was like 88%. So close to 90% of all stocks are owned by the top 10%. And if you just look at the top 1%, very tiny fraction of the population owns about 50% of all stocks, right? So that shows you who's pushing the market up, who's pushing the market down. When you see the stock market crash, that's when all the big money people at the very top decided to all get together and sell at once. It's not your neighbor. It's not Joe down the street, Joe Sixpack on their Robinhood account, selling their stocks. It's not that. It's the big money decides what's going to happen with the stock market, and that's why we call this the stock market. We have the market makers basically deciding where the stocks go. We've also seen other entities, kind of getting into the game here as far as stocks go, and it's very dangerous because even though the stock market is mostly controlled by the mega wealthy, a lot of people have their retirement tied up in the stock market. And if you have a need that comes up where you need the money, you're penalized for taking that money out. If you're looking at a 401k through your employer or something like that, you're going to be very heavily punished, basically financially punished, if you try to take your money out early. So pretty interesting scheme they have going on here. But let's talk about the debt ceiling. The debt ceiling was increased, of course. Nobody here is surprised, I don't think. There were a few theories that I had floated out there that I had read online, and even some of the comments on this channel, that they were going to use the non-passage of the debt ceiling to usher in the new digital dollar. And I don't think they're going to need that type of crisis to usher it in. It would have been a good opportunity, but I think that's going to be ushered in regardless. And I think that the crisis that they're going to the crisis that they're going to use to bring in the next digital dollar system is just going to be more of what's happening now. More people living paycheck to paycheck, more people desperate. But one of the theories is that they were going to cut off people's monthly payments, Social Security, for example, and that was going to be used to get people begging for the new digital dollar. But they still, and I'm talking about the lawmakers, there's many lawmakers out there that still want to completely get rid of the debt ceiling. They want they want it to be where there's no discussion. They want it to be where there's no process to increase the debt ceiling. It's just automatically increased, unlimited borrowing. And even though it's not really a debt ceiling now because it always gets increased, at least you have the doubt out there, that it may not get increased. But imagine if there was no doubt about the debt ceiling increase, if there was no limit at all. You would see inflation even worse than what it is right now because the spending would even go more out of control. And I know that's hard to believe because right now it is out of control. And it's hard to imagine even more reckless spending that we're seeing now. But it could be even worse. And that's what they want. They want no debt ceiling, no discussions, just basically the sky is the limit on the debt, which is only possible because of the fake money. Ever since 1971, we're no longer tied to the gold standard as far as the US dollar goes. But things are changing very slowly. Some may say very rapidly, but on a time perspective, as far as what we can see here, from day to day, it's a very slow process where countries are de-dollarizing and trading outside of the U.S. dollar. And now it's so many countries involved in this, we can no longer sanction or do acts of war against all the countries now that are de-dollarizing. So that's definitely something big that's changed just in the past few years. All right, but let's get into some other news here. We've got this report here. Workers are feeling grim about their retirement prospects. Study finds. So when we hear the talking heads, and this is out of this was reported out of Study Finds and Yahoo Finance. When we hear the reports about how everyone's doing so well, people have all this home equity, and people are rich on paper. Well, apparently the people don't feel that secure in their home equity because why? Because they know they have to sell their home in order to get that equity in their hand. So they're telling me my home is worth almost $700,000. This is a pretty small house here, 1,150 square feet. Paid less than 300,000 for it. This was over 10 years ago, and they're telling me it's worth 700,000. Does that make me feel great? No, because I know I have to sell it to get the money. And if I sell it, what am I going to go do? Go rent a place that's going to be $2,000-3,000 a month. I'm talking about San Diego prices here, San Diego rents. The equivalent size home for me to rent is going to be between $2,000 and $3,000 here in San Diego County. So I don't feel good about this equity at all. I guess if I sold the home and moved out of state, I might feel a little bit better. And that's what a lot of people have done. They've sold their California home and went to many lower priced cities and paid cash for homes, which now the lower priced cities that they used to be lower priced are not lower priced because so many people, like people in California that sold their home, moved to these cities and push the prices up. So now we see what used to be a smaller, more affordable city is now in a bubble also, like Boise, Idaho. A lot of people moved to Austin, Texas was another big place for people to go to. Even Nashville, Tennessee saw a big influx of people that had sold their homes in higher price states and moved to those cities and pushed the prices up there. Well, now we're starting to see some of the prices coming down in those cities. Of course, that's something we talk about a lot here is home prices. Home prices are coming down. They're going to continue to go down, but we've got the Fed out there. The Fed's talking about pausing the rate hikes, which is interesting because inflation really hasn't slowed down much at all, hasn't come down much. There's a couple bright spots. The cost of fuel has come down, which is a good thing. Actually, a few people have reported that egg prices have come down. Is that just a temporary dip? I think it's likely. I think we're going to see higher prices ahead. I hope I'm wrong on that. But workers are feeling grim about their retirement prospects. We see more people waiting to retire. I actually have a relative, my mother-in-law, has been talking about retiring, I think, for at least 5 years. And she keeps putting it off, putting it off, putting it off. And every time she looks at her, the cost of living, she decides to stay in the workforce longer. And she could have technically retired a few years ago, but she stayed in the workforce at least 5 years longer than she needed to have stayed in there. So it's pretty interesting. We're seeing more people do that. A Gallup poll out this week found that workers' expectations for a comfortable retirement are the most pessimistic they have been in over a decade. But yet we're not in any sort of recession. Remember, they changed the definition of a recession. And even if they didn't change the definition, the way that a recession is calculated is based on mostly consumer spending. So as long as there's credit being issued to people, as long as people can go further into debt, the GDP, gross domestic product, is always going to look pretty good. But even with that, very flawed system of calculating economic growth, even with that, we still saw 2 consecutive quarters of negative growth just last year. But even if it wasn't negative growth, it's still a very flawed design as far as how they're measuring the economy here. The debt ceiling talks are done. Why a stock market drop may follow. Worries over the debt ceiling have had the stock market on edge, yet Saturday they reached a deal on the debt limit. So now what they're saying is that the Fed is more likely to tighten, and that could be negative on the stock market, right? So we have good news. It's actually ultimately bad news, because the Fed is going to look at that and they're going to say, okay, the debt ceiling's passed. They're also going to look at these very flawed numbers, manipulated numbers. Okay, we can continue to tighten. In the meantime, things are crashing very slowly. And we look at car loan delinquencies are up, foreclosures are up. So what starts off as good news ultimately ends up being bad news. The Mises Institute, as interest rates rise, the era of deficits don't matter is over. We were told, and we're still told now, that deficits don't matter. The debt ceiling can be increased to infinity. It doesn't matter because we can just print the money. Well, now, with inflation, people are starting to realize, hey, it does matter. And this is very different than what we saw over the past few decades, where people really didn't pay attention to it. They didn't care about the spending. As long as they got their monthly check, as long as they had a roof over their head. And they always want us to pay for it. You ever notice that? So they say deficits don't matter on one hand, but yet you have to pay more of your earned income to help pay for things. So if deficits don't matter, why is that? You might want to ask yourself that question. But here's a report here that I think is very, very telling. There was a recent interview out of Stansberry Research, an interview with Peter Grandici, I think he pronounces it like that. And he says, quote, "We're going to face a far worse crisis than what we're going through at this moment." So things are going to get worse. Sounds familiar, right? Like I've always said here. He continues, quote, "We have half of our total revenue going just to pay the interest on our national debt," unquote. Think about that. Half of our total revenue, what the government takes in, is going towards just paying the interest on the debt. And this has been worsened now with the higher interest rates. So we're a country that has to borrow money just to keep things going. Interest rates are rising. It doesn't just affect people that have borrowed money, on their credit cards or personal loans or car loans, etc. The entire U.S. System is based on borrowing money, never-ending debt, and the ability to create this fake money, right? So we need to hedge against that. My favorite way to hedge is still silver. I do continue to look for ways, for places to invest and ways to make money. Some of you have helped me out on this channel, and let's wrap this up with a few shout outs to the people that have helped me keep this channel going, because most of you know I do this part-time. This is not my sole, my only thing that I do. There's a lot of people out there that this is all they do, is just they do YouTube videos and they make a living off of it. I'm not so lucky, or I guess I could just focus on this and probably do a lot more, things like do a lot more outside videos and stuff like that. But for now, to be safe, I'm keeping the the day job, so to speak. But thank you to those people that have helped out this channel and allowed me to still put out these videos. And here they are. Thank you to Sue Oni, as SU space ONY. I'm not sure how you would pronounce that. I'm very sorry, but thank you for the super thanks donation. Maria Rivero, so much help from Maria. Thank you very much again, Maria, for the super thanks. Thank you to Pax OR32. Is that your real name or is that a screen name? I hope it's a screen name. Very unique name. Thank you, Pax, for your donation. Christopher Quinn, so much help again from Christopher. Thank you very much for coming back and helping out here. Moose Munch. Thank you to Moose Munch for your kind donation and support for this channel. David Amati, thank you very much. Mike S., thank you very much. I've seen both of you here before also. Bobby Seals 07, thank you very much. And one more here. Rick Enfield, thank you for your kind tip and donation. The super thanks button's right down there for those of you that want to help out. If you appreciate these reports, thank you very much. I'm so blessed to have you here. Really appreciate it. Big love to everybody. Might not see you until Tuesday because of the holiday, or it depends on how things go. I might put out a report on Memorial Day. Either way, hope you're well. Keep stacking. Stay safe, folks, and we'll see you soon. Big love. Bye for now. Peace.